what's happening with the entire auto pack, given that all the commentary and all the tailwinds now seem to be in their support. The bigger question is whether or not there is further headroom in the stock prices. Are they already factoring in the best? Because if you just look at the kind of averages, the 5-year averages that they've been trading at historically, I think only Maruti, Tata Motors and Escorts, if I'm not mistaken, are the ones which are still sub their 5-year averages in terms of valuations. Rest all of them have exceeded, as has the Nifty Auto Index as well as a whole. So let's try and understand this a little bit better. We've got Jinesh Gandhi joining in on the show right now from Motilal Oswal. Jinesh, hi, good afternoon. Good to have you on the show. Jinesh, the question on everyone's mind, how much more headroom for autos as a pack? Because the auto index as well is already trading at a premium to its 5-year average. Are the valuations now looking stretched for the sector at large?
Hi, Isha. Good afternoon. So clearly, auto as a sector has done very well with keeping in line with how autos volumes have been performing, how earnings have been recovering. But if we take a step back and look at slightly longer period, clearly auto sector is coming back after 5 years of challenging times. It's only last year and a half of recovery which we are seeing today. And we do believe that we will see sustained recovery in auto OEM volumes in India. So that's the first leg of driver. The second leg of driver from here on, what we see is recovery on the export side as well, where the OEM volumes, particularly on the two-wheelers, are bottoming out. And we do see scope of that recovering from second half FY24. So that is second. And thirdly, what we are not yet fully baking in today, is in form of commodity prices, which had stabilized some time back. And again, we are seeing some bit of corrections in commodity prices, which can further boost autos earnings and in turn may make valuations a bit more reasonable than what they look today. So that is one way to look at it. The second way to look at it is particularly we saw the rally first starting in passenger vehicle names, then commercial vehicles, and now we are getting into the two-wheeler side of the story. We are also quite positive on the auto component side, where there are some of the structural themes in terms of export opportunities, in terms of content increase stories. So those are also the stocks which are doing very well in last few months. So valuations have definitely got re-rated in certain places that they have come back to where it belonged. So clearly, we do see still some headrooms in select pockets. In select pockets, we are seeing valuations now getting richer. So that's our broad thoughts on the sector.
Thoughts, but let's get stock specific, Jinesh, because I wanted to understand from you, what's your view, which is the most overvalued stock right now and which is the one which is ripe for a re-rating?
So if you look at overvalued stock, so if you just go by the valuation parameters vis-a-vis the historical range, clearly there are stocks on, say something like TVS Motor, for example, which is trading at a premium to its historical range, probably because of its outperformance on the operating performance side in terms of market share recovery, in terms of margin recovery, so delivering on double-digit margin promise. So clearly, the re-rating which has happened vis-a-vis historical averages is driven by the fundamental parameters. So in that context, it is expensive than the historical averages, but there are reasons why it has happened. So in terms of on the auto component side, there are stocks which are trading at a substantial premium to historical averages. In certain cases, there is not so much long history like of Sona BLW, where they're trading at a substantial premium to the peers. And that is predominantly driven by the EV story around the business, the order book, which they've been adding every quarter, and because of which they're trading at a premium to the underlying sector. So one can't broad brush about the valuations in terms of cheap or in terms of or expensive valuations. The underlying business parameters have been there. In terms of relative cheapness, clearly Mahindra still looks quite attractive in terms of valuations. It's still trading at a just about 15, 16 times on March 24 basis and has good, strong structural story around it. So yeah, so those are the few names which comes to my mind when we talk of relative attractiveness of the stocks.
Jinesh, great to have you on the show. We'll let you go on that note. Thanks as always for joining in. Completely flattened out, by the way, for the index. We're just on the brink of actually dipping into the red as we speak right now. The key pressure points, of course, in trade today have been SBI, HDFC Life, Bajaj Finance, Tata Motors, Titan, etc. as well.